probably the first, I believe the first, to say the run to gold has begun. And that was around the $2,000 gold level. And I said the reason the gold run has started is because the central banks are buying in such large quantities, relentlessly. And that the run to gold starts with a very benign walk, kind of a shuffle, then a full walk, and then a brisk walk, and then a light jog, a full jog, a slow run, a fast run, and then a sprint. And that's the analogy for the run to gold, going from the stealth mode where only the smart money central banks are buying it like crazy, and the public is just ignoring it, not even aware of it. So now we've gone into problems.
What if I told you that while you've been worried about your grocery bills, the world's most powerful banks have been quietly preparing for the collapse of money as we know it? Central banks across the globe are hoarding gold in record quantities. China alone has been buying gold at a pace not seen since the 1970s. Russia, they've dumped US dollars and loaded up on precious metals. Even Switzerland, the home of banking, is stockpiling gold. But here's what's really shocking. While they're buying gold by the ton, something strange is happening to silver. Despite exploding demand from solar panels, electric cars, and tech companies, silver prices are being kept artificially low. How? Through a paper market so massive it trades 250 times more silver than actually exists. Meanwhile, governments have printed more money in the last 15 years than in the previous 200 years combined. Your dollar? It's worth 35% less than it was 2 decades ago, and it's accelerating. But the real kicker? A silent reset is already happening. Countries are abandoning the dollar for trade and building their own alternative payment systems. The BRICS nations, representing 40% of the world's population, are constructing a parallel financial system. The question isn't if this system will collapse, it's when. So what exactly is happening behind closed doors? What do the world's financial elites know that you don't? And most importantly, how can you protect yourself before it's too late? Let's unpack what precious metals expert David Morgan says could be the financial system's Achilles heel. Don't forget to like, share, and subscribe for in-depth market commentary and commodity analysis. Let's dive
Anyway,
in.
a few years back, I did a speech titled Why Silver is Not Treated Like Gold, or something along that. It was a little better title than that. But the whole point of the speech was that silver had been demonetized in the late 1800s. And if silver were treated as a monetary metal, then you would have a whole different gold-silver ratio and a whole different dynamic, because gold is really an establishment metal. Now, you won't hear that on the main financial channels, but it's the you show me, don't tell me adage. Look, central banks have been buying gold hand over fist for quite some time, but especially the last 3 years, probably going into the fourth. And on that, I've been on many interviews. As you know, I get a few almost every week, and I'm grateful for that. But I was probably the first, I believe the first, to say the run to gold has begun. And that was around the $2,000 gold level. And I said the reason the gold run has started is because the central banks are buying in such large quantities, relentlessly. And that the run to gold starts with a very benign walk, kind of a shuffle, then a full walk, and then a brisk walk, and then a light jog, a full jog, a slow run, a fast run, and then a sprint. And that's the analogy for the run to gold, going from the stealth mode where only the smart money central banks are buying it like crazy, and the public is just ignoring it, not even aware of it. So coming back to silver, if silver held the esteem banking system was treated as a monetary asset, a reserve asset, it would be a different story. And so that was the whole point.
Silver used to be money, real money, just like gold. Up until the late 1800s, most countries used both gold and silver to back their currencies. But then something changed. Nations started ditching silver and keeping only gold in their vaults. While gold sits in central bank vaults, being treated as the ultimate store of value, silver got thrown into the industrial pile. Financial analyst David Morgan thinks we got this backwards. He argues for bringing back a bimetallic standard, backing money with both gold and silver again. His point: it would create natural limits on money printing and give us a much more stable financial system.
Walk phase we're in for gold. I've had on that say the price of gold could no longer be managed. The metal is finally liberated.
That's a tough one. It's a opinion only, Danielle. I can't give you a fact, but it's certainly acting that way. Silver has acted that way as well, but it's rare. When we had the 2011 high, when we got around the 30 level or so, I mean, we quickly went to 50, and that was basically the paper traders got beaten for a while, a short while. Gold is a bigger asset again, widely based. And I think part of it has to do with this Fort Knox situation where we're going to go audit Fort Knox. Whether we actually do or not remains to be determined. But I think there was a scare in the market where the cover ratio for paper to physical was a mismatch. And so a lot of gold was coming in one direction to kind of fill the shelves if it was required. That's my guess. So I would lean toward the idea, yes. But I think it may be a temporary event. And I honestly think you may be asking in the future, but I think we've topped out in gold for a little while. I think we may see the summer just kind of go sideways to down. That's kind of a minority view. It's a contrarian view within a contrarian asset, but that's the way I see it.
His new estimate is that a 10 trillion bailout package is now being prepped. That's the number he's working with that he feels will keep it going. Does that estimate make sense to you?
Yes, it's an exponential function, and that means that you know a true an exponential function. For quick example is the checkerboard that most kids learn about in grade school. You know, if you put a penny on the first square, two the next, four the next, eight the next, 16. That's an exponential function. It's two squared, and and so when you get into the final phases of the great inflations, they do go exponential. Not necessarily by that factor, but they do go exponential. So it goes the two, and then the four, and then the 10, and on it goes. So once the market recognizes that in a big way, then you'll see the bond market deteriorate. And that's the key to the whole thing. A debt based monetary system is based on debt, and that debt has to be trusted, or it has to be a confidence factor. And we're taught over and over again that the most stable place to put your money is in the United States Treasury market, which is the debt market, which is really unstable in the fiat money system. They always fail, or they always have. So my contention is that this one is destined to fail. But before we get to that quote unquote failure, we'll have a new system imposed upon us.
Going back to the direction of gold and silver, you mentioned, expect to see some sideways action. Why is that? Why do you think gold doesn't just, do you not think it can march up to, 4,000, 4,500?
Well, it will, but I think all markets back and fill. That's a commodity term, and I think that gold is kind of due. And if you look at a short-term basis, gold has basically gone parabolic or an exponential function for a very short time. It's just the way markets move. I could be wrong. Certainly, I don't think the correction in gold is going to be that severe, but it could be momentarily. Remember, the function of a bull market is to shake off as many participants as possible.
Right.
And so very few people hold on to that bull all the way up. And that's I think one of my main jobs to help my, people that subscribe to the Morgan Report hold on, because I don't want anyone shaken off as this market unfolds into the eventuality of wherever gold goes. And I do think silver will catch up. It's just that it's going to happen very rapidly, most likely very rapidly, and it's going to happen at the end of the market. So gold's going to lead for a while longer, and then silver will start to catch a bid and move on. Once we get above $50 silver, and I believe strongly that we will, then we could see what silver really holds.
The elites, the central bankers, you guys love paper money. Why why are the elites so tied to fiat currency? Why can't they accept gold and silver?
Well, it ties their hands. You cannot, create it out of nothing. It's not a digital world, it's a physical world, and it's a limit. And of course, you can have inflation under a hard money system. It's happened. I mean, when you get a huge gold strike, the money supply increases. I mean, the conquistadors in South America in the old days went and got all kinds of silver, and it caused inflation. It's an increase in the money supply is the true definition. But overall, in the long term, there's nothing that really works as well as a bimetallic standard. And this is why silver is really important for a hard money standard. I'm going to digress a moment, but there's a paper out called Gold standard equals fiat in disguise.
Mm-hmm.
And this gentleman talks about a gold only standard always immersed into fiat only. And there's no limit on a gold only standard once it flips to fiat or a fiat equivalent. How many dollars does it take to buy an ounce of gold? Go back to 1913. Silver's demonetized officially in 1873. So in 1913, it was $20.67 the ounce. Now it's almost $3,500 the ounce. What happened? If it's a constant, the dollar paper would be the same amount today. Gold would be the constant, but it's not. Gold, the metal is constant, but the paper deteriorates over and over and over again. And that's the path we're on. And we're going to get to the end of that game here in the near future, in my opinion.
As we wrap up today's analysis, let's talk about a crucial pattern that could impact your precious metals strategy. History teaches us something important. Bull markets never go straight up. They pause, they pull back, and they shake out what we call weak hands. Those investors who panic at the first sign of trouble. Gold exemplifies this perfectly. Even during its strongest bull runs, gold experiences brief dips that can feel scary in the moment, but are actually healthy for the long-term trend. These pullbacks aren't something to fear. They're buying opportunities for patient investors. But here's the real opportunity. Silver's behavior is completely different. While gold leads the charge, silver typically lags behind, looking sluggish and disappointing many investors. But when silver finally breaks key psychological levels, especially that crucial $50 per ounce threshold, it tends to move explosively, often delivering gains that dwarf gold's performance. This isn't just theory. It's backed by decades of market data. Financial experts consistently observe that gold bull markets create the foundation for corresponding silver bull runs. The pattern is remarkably consistent. Gold leads, silver follows, but when silver moves, it moves big. So here's your takeaway. If you're invested in precious metals, patience is your greatest asset. Don't let temporary pullbacks shake you out of potentially profitable positions. That boring performance in silver? It might just be setting up for the next explosive move. What's your take on the current gold-silver dynamic? Drop your thoughts below, and don't forget to subscribe for more market insights that cut through the noise. Until next time, remember, successful investing isn't about timing every move perfectly. It's about understanding the patterns and positioning your